The US has finally put boots on the ground, potentially, into southern Iran. They are trying to take over an island that has the majority of Iran's oil production in US control. What is that going to do to crude oil price? What is that going to do to the overall stock market? In today's video, I'm going to explain a few different indicators that are pointing to a bottoming out situation in the market. And we're going to go in detail about what happens in the past when we do end up touching these levels. All right. So we're going to take a look at the S&P 500. We're going to take a look at the NASDAQ, crude oil, the VIX, the dollar. We're going to take a look at all the large tech stocks, gold, silver, and the crypto market. All right. So without further ado, let's get started with the video. All right. So what we're looking at right now is the chart of the New York Stock Exchange Composite Index, which is the NYA. And we're using the NYA to map over the NYSE McClellan Oscillator, which is the NYMO. Okay. So the NYMO, the McClellan Oscillator, is essentially a good way to jot out overextensions to the downside, as you can see. Okay. So currently, right, the NYMO is at negative 87.72 on the daily time frame. Now, what occurs in the price of essentially the S&P 500 when the NYMO is this far overextended to the downside? Okay? So we are going to just look in history. This is a daily time frame. We're also going to look in history on the weekly time frame as well of when this occurs, what ends up happening to the S&P 500. And what we find is beautiful, it's phenomenal, and it allows us to be on the right side of the market. This is just numbers. All right? This is literally just numbers. So, very, very simply, as you can see here, let's go back to the first example in the past 5 years was late September into August of 2022. This is the S&P 500, essentially. We dropped very, very aggressively, and then we ripped to the upside months afterward. Correct? This is one example. And as you can see here, the NYMO dropped to about negative 125. Okay? So we dropped to negative 125 down there, and we bounced on the NYMO. Okay? The next instance, the NYMO was around negative 100. And the NYSE also bounced very, very aggressively right afterward. Correct? The third is right here. August into September of 2023. Same concept occurred. We ended up bouncing right here. You can see a nice little bounce here. And the NYMO also bounced very aggressively up here. All right. Last couple examples right here into April of 2024. Nice bounce, huge rip to the upside, correct? The NYMO was around negative 100 as well. And right here in January of 2025, January of 2025, market bounced very aggressively also, ripped to the upside. And last but not least, the big kahuna, right? The big kahuna, right? The big explosion to the downside. We ended up bouncing off of April's lows of 2025 while the NYMO was at almost the exact same level as we are right now. And we ended up bouncing very, very aggressively. You're not going to see anyone give this sort of analysis I haven't seen anyone give this sort of analysis. So I'm doing my best to really show you guys and give you guys really, really good value. So right now, this is a chart of stock charts. We're going to go ahead and look at TradingView as well and really, really deduce exactly what's going on. Okay? So this is stock charts. We just looked at the daily time frame. This is the weekly time frame. And we are about to see almost the exact same concept on the weekly time frame as well. Okay? So when the NYMO is very far overextended on the weekly time frame, it almost always leads to a very, very nice bounce. Okay? It almost always leads to a very, very nice bounce. Time and time again, man. You cannot fake these results. You cannot fake these numbers. Time and time again, they have led to nice bounces. All right. So once again, September into 2021, as you can see, clear as day, right? Clear as day. Big bounce. March of 2023, clear as day. This is a weekly time frame. Each bar is a week, clear as day. Nice bounce, correct? Again, over here, clear as day, multiple week rally. April of 2024, multiple week rally. December of 2025, multiple week rally. And then again, last but not least, October of 2025, multiple week rally. All right. So you cannot fake this. All right. This is all there right in front of you. Now we're going to take a look at the S&P 500 itself on these times. Okay. Okay. So now this is a daily time frame of the S&P 500. And what we're seeing, once again, I jotted out, not perfectly, right? But in the area, essentially. In the area of those stockchart.com charts that we had, this is essentially where we ended up bottoming out. Okay? So this is September and October of 2022, right? This was a very, very important time that we were looking at, right? On the daily and the weekly time frame, we ended up bottoming out in this zone. And what ended up occurring 2 to 3 months afterward? The S&P 500 rallied above 4K, and this was a very, if you were bullish down in this zone, my point is, guys, the point of why I'm showing you this is we are trying to ascertain what the best possible place would be to start becoming bullish. Okay? And my argument is based off of this indicator. We're going to go off of other indicators as well, but based off of this indicator itself, it's giving a very good reasoning to start leaning bullish on the overall market. Okay? So now with that being said, what ended up occurring here? It's September, October of 2022. We bottomed out. We bottomed out very, very nicely, and we ended up bouncing very aggressively. Okay? You cannot deny that. But hey, Hamid, oh, this is just one example. Oh, maybe it's just one example. Oh, hey, let's see some more data. Let's see some more data, okay? March of 2023 as well. On the daily and the weekly time frames, the market bottomed out. This was extreme weakness, okay? And at each and every single time that this has happened, this was extreme weakness. The market was very, very bad at every single time this happened. Many people thought we were entering a bear market every single time this occurred. But the numbers don't lie. Warren Buffett himself, he said, buy when there is fear in the streets. This is fear at every single point. Okay? So we ended up pulling back very aggressively in March of 2023. We bottomed out and we ended up bouncing very aggressively the months thereafter. Okay? Moving forward, this is August of 2023. We bottomed out into the end of August, and weeks afterward, into the beginning of September, we had a big bounce. Okay? This was not a continued bounce, right? We ended up falling lower and then ripping higher and then ripping much higher, right? But even in the short term, this was a really good opportunity to be bullish. Okay? Moving forward, moving along. Okay. April of 2024. Okay, so next, all right? This is April of 2024, right? The numbers are right in front of us. It's not like I'm showing you guys something arbitrary. Oh, this is just your opinion. No, we looked at stock charts. We looked at when the McClellan oscillator was very far overextended each and every time. And we got some really important data. So this is just a continuation of that data, man. April of 2024. The market hit 5K. We dropped very aggressively. We pulled back into almost a 7% pullback. The market looked like it wanted to really drop even lower. And guys, what was the mindset of everyone? If you guys were looking at the market, I want everyone to just take a deep breath. If you guys remember the market from a couple of years ago, when we were hitting these new all-time highs, everyone was very, very bearish. Like, they thought that we should have gotten a pullback because the strength we were seeing in the market was purely, it didn't really make that much sense, right? So when we were getting this extreme strength, rallying so aggressively, any small pullback that we ended up getting ended up being a really, like, the bears came out of the woodwork. The bears were like, oh, that's it. Okay, we're going to end up pulling back now. But that didn't end up occurring, right? Because of these indicators and because the math behind what needs to occur to create a healthy market environment, when things got this overextended to the downside, they became good buying opportunities, okay? So, moving forward, April of 2024, what ended up occurring? We ended up bottoming out here and ended up bouncing very, very aggressively, making new all-time highs, okay? Continuing on, right? So this was one of the worst possible scenarios. What we're about to see right now was April of 2025, right? April of 2025, right here on August 7th at the lows down here, we went long. I alerted long swings at the exact bottom on April 7th, 2025. This was also in line with when the market ended up bottoming out in terms of the McClellan, right? Thank you, Mike. Thank you, Hamster, for the follows. Okay. So, with that being said, what ended up occurring after this? We bottomed out very, very aggressively and ripped for how many months? April, May, June, into July. We ended up making new all-time highs. And within these 4 months, we saw almost a 25% increase in the S&P 500. A 25% increase in the S&P 500. All right. So this is, we're getting to the point now in the current price of the S&P where something like that should occur soon. Okay. So to be bearish down here into this weakness, as we just saw, right? Based off of all of these other points in the past 5 years that we've looked at on the McClellan, we could have looked at the past 10, 15, 20 years. We could have been here all day. But right now, to be extremely bearish on the market, based off of exactly what we just saw, in terms of the McClellan oscillator, that is one instance to have your eyes on the long opportunities. Okay, this is not really a great opportunity to become extremely bearish. This is, in turn, this actually becomes a good opportunity for bears that are chasing to get squeezed. Okay? So let's just take a look at this. All right? How far are we off of the all-time highs? We're down about 7%. We hit about 7%. We're down about 6% right now. Okay? So yes, by all means, we can definitely see some more weakness. Another 2% drop from the current price would bring us down to 6,500. By all means. No one is saying that we're not going to get another pullback. By all means. But my thesis is that what we've seen so far out of all of those other numbers is that 4 months after each time this occurred, the market ended up being green. So was this after 4 months, every single time we've seen this, the market was green? After 4 months, minimum, every single time that we've seen this sort of weakness, minimum, the market ended up being green. Okay? So regardless of how weak the market is going to end up becoming now, it's just numbers. Okay? It's just numbers. Regardless of how we feel about this, it's just the way things are. Okay? Every single time. Yes, in the short term, for another week, 2 weeks, there could be some choppy price action. It could be weak, etc. Right? But to be bearish down here does not make sense. That is my thought process, right? Even if you're chasing another 1, 2, even if you're chasing another 5% move to the downside, the upside potential is extreme bullishness. That's my thought process, okay? So that is one clear-cut reason to remain bullish down here. Even if we get monster pullbacks, even if the market continues to drop lower, that in and of itself is one reason to look towards longs. All right. Next, we're going to take a look at the VIX and the crude oil. All right. Those are really, really going to help us definitely see things in a better way. Okay. Okay. So now this is a daily time frame of crude oil. All right. Crude oil is currently trading within the Bollinger Bands. Why do we look at the Bollinger Bands? Is because they denote extreme overextension or overextension to the upside or to the downside in terms of the median price. Okay. Right now, crude oil is still trading within the upper bands, which means that there's a lot more room to go on crude oil. Okay. There is a bit more room to go on crude oil, purely based off the technicals, purely based off of what we're looking at in terms of the Bollinger Bands. Now, back when crude oil first started making the monster bounce to the upside, I was bearish on crude oil because this move to the upside was not going to sustain itself. I was bearish. I thought the market would get a pullback. And what ended up happening? Crude oil dropped 30% in a day. And within those 2 days, crude oil dropped almost 40%. Now that extreme has left, okay? That extreme has gone. Crude oil has come back and reclaimed almost $100. What can end up occurring now on crude oil, okay? So currently, the U.S. has taken over an island in Iran, Krug Island, in the south of Iran. That is where the majority of the country's oil production is. So now Iran has a decision. Okay, so there's so many different layers and there's so many different variables that are going on with crude oil currently. Okay, so Krug Island, now the Iranians have a choice. Do they want to attack the United States or do they want to attack their oil fields so that the United States cannot get it? That decision in and of itself is a huge decision. If they attack their own oil fields, then the oil production of the country drops very, very dramatically. If Iran's oil production drops very, very dramatically, it will be very bad for China. It will be very bad for Russia. Okay? That's one variable. The second variable is that oil production in all of the Gulf countries, Saudi Arabia, Qatar, Bahrain, Oman, these countries' oil production, their fields are either being destroyed or their oil production in and of itself are dropping. So now that is an issue in and of itself because regardless of the Strait of Hormuz being closed, if Saudi Arabia, for example, they stopped, if their production was still going on, but the Strait of Hormuz was closed, you could drive tankers into Saudi Arabia. You could fill some tankers up and then you could drive it to other countries. You could drive it through Jordan and, into Europe, etc. That's no problem. But with these countries shutting production down, there's no driving the oil away. There's no bringing the oil through waters. That does not occur. So because it's a double whammy. The oil fields are being destroyed and the production is being closed in these other parts of the country. So that also props up crude oil. The third thing is obviously the Strait of Hormuz being closed. So with the Strait of Hormuz being closed, that drops the supply even more. And all that we're doing right now is we're looking at simple supply and demand. With the supply of oil in Iran being dropped, the supply of oil in the Gulf countries being dropped, the supply of oil traveling out of these Gulf countries being dropped, the demand increases. If demand increases, what ends up occurring to the price? The price does very, very well. For people that are bullish on crude oil, the price is doing very, very well for them. Imagine you had a baseball card. There was only one baseball card in the entire world of that type. The price of that card would be very, very expensive. But if you increase the supply, the price of that card does not become as expensive anymore. So what's going on in the Middle East right now is they are decreasing the supply, essentially, from 1,000 cards to 1 card, to 5 cards, to 10 cards. So the oil that is still remaining ends up being way more expensive. That's why we're seeing a huge spike in price of crude oil as a whole internationally. Okay? Now, those are three main reasons. So Iran's oil production being tainted in Crude Island, the Gulf countries' oil production shutting down, and the Strait of Hormuz being closed. The fourth thing is that oil fields in Iran themselves are being attacked by the United States. Okay? So that in and of itself is a fourth reason it drops oil production in Iran. China relies, I believe, 60% of Iran's oil goes to China. The Strait of Hormuz closing affects so many countries internationally. All right. Now I want to really, really have you guys understand the international implications of why this is bigger than just a war. All right. This is much, much bigger than just a war. All right. Perfect. So, all right. So I hope you guys are understanding exactly what I'm saying here, right? Now I want to give you guys like an implication of what is going on internationally and how this affects governments, how this is going to affect international communities themselves, right? So, during the Ukraine conflict, Europe stopped taking oil from Russia, essentially, right? So now Europe was heavily, heavily dependent on oil from the Middle East. Okay? Now that Europe is heavily dependent on oil from the Middle East, when oil is up this aggressively, the UK does not have that many more days or weeks of oil reserves for their country to have. So if there's going to be an oil shortage in the UK, essentially what this occurs is a potential huge recession in Europe because oil is this sharply rising, okay? And the longer, now it's also time related. It's not just price. Okay, price of oil can jump up to 150 tomorrow. But it's the time that we remain this high that is detrimental, okay? So Europe cannot afford expensive oil like this. If the price of oil maintains itself this aggressively for a very long period of time, Europe is going to be in a recession. Period. Europe will enter a recession if oil remains this expensive. Okay? India receives 60% of its oil from the Middle East. If oil is expensive and continues to be expensive in India, not only will these people not get reelected, they will lose power over their people, they will not get reelected, and it will cause massive financial burden to an already financially burdened country. Okay? South Korea receives, I believe, 70% of its oil from the Middle East. South Korea will also not be happy about oil being this expensive for this period of time. Japan only has a couple of months of oil reserves left, and Japan, for the past couple of months, has gone through tumultuous, extreme cases of impending disaster to their economy in terms of their central bank. If you guys have been monitoring what's going on with Japan, right? In terms of their central bank, in terms of interest rates, in terms of what's going on in the weakening of their currency, right? Japan cannot afford something like this. South Korea cannot afford something like this. India cannot afford something like this. Europe cannot afford something like this. Okay? What do all of these countries have in common? They are all allies of the United States. What benefit? Now it's even more. Now this is even a deeper layer, right? So on the base layer, South Korea, Japan, India, these European countries are going to end up losing re-election if this maintains itself. They're going to hit a recession, they're going to go through economic collapse, and they're going to lose re-election. That's the base level. The extra level is all of these countries being majorly affected right now are U.S. allies. So not only does it affect directly these allied countries, it affects the hegemony and the overall strength that the US has internationally. Does that make sense? So now think about it. What incentive do these countries have to remain allies of the United States? This is game theory that the United States politicians and military brass and these people are going to be thinking about. Okay, what incentive do these guys have to be our allies? That is a very, very real question that these guys are asking right now. And if, for example, the Middle East had tons of different US military bases, but Iran was able to easily destroy them. Obviously, there were no US soldiers and stuff in these bases as a whole, right? They were told to evacuate. But these Middle Eastern countries, who basically gave up all of their oil supply to the United States, they did it in return for protection. What is Iran showing these Middle Eastern countries now? That the US is not protecting them. That is a big thing that a lot of the country's citizens now are looking at. So Saudi Arabian citizens, Qatari citizens, they know that they signed basically with the United States. They know that they have made a defense pact with the United States. But now when they think about it, what incentive do these citizens now have to remain loyal to the leaders of these countries, to the monarchs of these countries? What incentive do these citizens have to remain loyal to the powers that be that give up all of their oil to the United States in terms, hey, you give us oil, we'll protect you. There's no protection going on. Now, South Korea, Japan, they're going to look at this as well. There's no protection for the Middle Eastern countries that produce all of their oil. How is South Korea and Japan going to be protected by China? China is definitely looking at this like, wow, okay, the United States cannot even protect their vassal states in the Middle East. They are looking at Taiwan. China is definitely looking at Taiwan. Okay? Russia, they are basically beating Ukraine, right? European countries, regardless of all the Patriot missiles, regardless of the help that the European countries were giving to Ukraine, Russia won. In the Middle East right now, who is the main victor? So now with that, all of that being said, I hope all of that made sense, right? All right, so now with that being said, what did we just look at? We just looked at crude oil. We just looked at the McClellan oscillator. We just looked at the S&P 500, right? What I also want to take a look at is the VIX, okay? And the VIX, hedge funds and banks are very, very heavily dependent on the VIX because the VIX has a lot to do with the math of option contracts, okay? It's very, very important, all right? So, awesome. Thank you for the... So, let's go ahead and now take a look at the VIX, okay? All right, you guys could see it. All right, perfect. Okay, so what are we looking at on the VIX? Why do we monitor the VIX? Hamid, we just looked at everything. What's the point? What's the point of looking at the VIX? I don't know. Oh, I'd rather look at my phone. I don't want to look at the VIX. I'd rather just look at my phone and everything. I'm not really sure. Okay, so why is the VIX important? Is because it does the opposite. The VIX does the opposite of what the overall market does. Okay, very, very simply, you could look at it like that. All right, it's an inverse. Exactly, perfect. So if the VIX is strong, right, the overall market is weak. Very, very simple. You don't need to overcomplicate it. Okay, we could go in detail about the internal dynamics of the VIX. Oh no, it's not that simple. It is. Okay, it is. Please, just take my word for it. So, when the VIX is strong, so now let's zoom out. Let's take a deep breath. This was like 30 minutes of non-stop information, all right? Why is the VIX important, okay? What we use the VIX for is to track overextension and extremes, okay? We like to monitor the VIX at extremes. Why is that? Because extremes cannot maintain themselves in the market. What did we just look at with the S&P? Those were extremes to the downside. And what did we end up looking at? Those extremes did not maintain themselves, correct? So when the VIX was very far overextended, showing extreme strength to the upside, this ended up being a good opportunity to look at the opposite in the overall market. Okay, so the VIX, we gapped up, showed a lot of strength. These 2 days, we went long in the market. We ended up going long in the market. We remained long. We ended up hitting 100, 200% trades because the VIX was very far overextended. And what does that mean? Once again, when the VIX is very far overextended in terms of the Bollinger Bands, when it's trading very far out of the Bollinger Bands, the VIX returns back into it. That is what these standard deviation levels on the Bollinger Bands denote. Okay? Very, very simple. When something is trading outside of the upper band, what does that mean mathematically? It means it's trading outside of the second standard deviation. For everyone that took differential and calculus, this is very far overextended. And algorithmically and mathematically, price does not want to maintain itself out of these levels. Okay? So what ends up occurring? The VIX drops very, very dramatically. Now, to really, really drive it home, let's throw on a chart of the S&P on the VIX. And what ends up occurring on the S&P when the VIX ends up very, very far overextended. Okay, let's throw that on there so that you guys get a really, really good understanding. Okay, so that he's just talking nonsense, but let's look at it together as a group. Okay, so the VIX over here, February of 2026. As you can see, the VIX, the candles are the VIX, the line is the S&P. Okay, the VIX was very far overextended. As the VIX pulled back, what ended up occurring on the S&P? The S&P bounced very, very dramatically, right? It bounced very, very dramatically. Over here, let's look at it right here. All right, let's look at it right here together. The VIX opened and closed outside of the upper bands. As it pulled back into the Bollinger Bands, the S&P bounced very, very dramatically. Correct? We could go down the list every single time this has occurred. Every single time the VIX has done this. You don't believe me? Put it up on your own chart. Do your own due diligence. I'm telling you, this occurs. This is one of the internal market dynamics that hedge funds, that banks monitor. When volatility is very sky high, they don't want to maintain volatility that high. They want to drop volatility down. When the VIX drops down, what ends up occurring with the S&P 500 or equities prices? Equities prices bottom out and they start to do very, very well. Okay? Time and time and time again. Okay? Now, really, really drive it home. October of 2025. We could go down the list for years. We could do this for years, guys. October of 2025. VIX also very far overextended to the downside. To the upside, start to pull back. Whoa, start to pull back. What happened with the S&P? We consolidated and got a monster move to the upside. Time and time again, just for context now, time and time again, when the S&P is showing weakness, when the VIX is very far overextended to the upside, as the VIX pulls back down, guys, as the VIX pulls back down into the Bollinger Bands, the S&P does very, very well. Okay? So those were some of the instances, and we just looked at those together. All right? Now, what are we looking at on the VIX? So, pragmatically speaking, now, and our analysis is going to be purely pragmatic. Purely pragmatic, okay? Even in March and April, right? You could put that on your chart. The exact same thing occurred. April of 2025, the VIX was very far overextended. The market bounced really, really aggressively as the VIX fell. Same concept, okay? What are we looking at right now? pragmatically speaking. Similar to crude oil, we are not very far overextended to the upside in terms of the Bollinger Bands. The VIX is hugging the upper standard deviation, okay? Which means that there is a lot more room potentially to go to the upside on the VIX before it becomes overextended, okay? So, this is not your best case scenario for bulls, okay? Because if the VIX can continue to just hug along this line, because right now the upper level of the Bollinger Band is clearly straight up in the air, right? As you can see, it's straight upwards, correct? All right, so as you can see, it is straight up in the air, doing very, very well. As the standard deviation is straight up in the air, it would take an extreme price movement for us to trade outside of the upper bands, which is bullish for the VIX, but it's bearish for the overall market. Now, pragmatically speaking, okay? So now, with that being said, as the Bollinger Bands continue to rally upwards like this, the VIX can continue to just bounce, right? There's nothing really stopping the VIX from continuing to show some strength, okay? Pragmatically speaking, it is what it is, right? Now, until there's over extreme an extension to the upside, you can't be extremely bullish in the short term, okay? That's the thing. In the short term, the market can continue to drop. In the short term, meaning in the next week, 2 weeks, the market can continue to show some weakness. By all means, no one is saying, oh, this is going to be bullish. But my thought process for crude oil was they do not want crude oil to maintain this expensive. According to the McClellan oscillator on various different every single time we've hit these levels has led to a bounce that was bullish 4 months down the line. As well as the VIX. The VIX does not generally maintain itself above $25, above $26 for over a month. So, we're currently trading there for the next couple of weeks. Yeah, for sure. We could end up continuing to show some strength on the VIX. By all means, we could continue to show some weakness on the overall market. But pragmatically speaking, my overarching analysis moving forward is these are good buying opportunities in the overall stock market. The S&P 500 is showing good overall buying opportunities. It doesn't make sense to become bearish here. Doesn't make sense to become bearish here is the question. In my opinion, it does not make sense to really become bearish in the short term, even though things are pointed to a downside move, right? But in terms of a trade, in terms of the risk reward on a trade, I would rather sit back and let the trade play out to the downside. Let it go. Let it go. By all means, right? Let it go to the downside. I don't want to short and chase the hole. As the market is already showing this weakness, I don't want to short this hole with volume, with size on my portfolio. Let it drop. I would rather let it drop, man. Hey, you want to show some weakness? By all means, go for it. So now, based off of this analysis that we saw, purely based off of the VIX, crude oil, even the McClellan oscillator, there is a bit more room to drop to the downside, okay? No one is saying there isn't, right? But for us to be extremely bearish down here makes absolutely no sense, all right? I would rather look to go long into weakness. When everyone is extremely bearish, when everyone thinks that you're stupid, that is always the best time to go long. Right now, we haven't really gotten there. We're around there, right? But in the next week or two, as the market really capitulates, if it capitulates, and you want to try to go long there, you post something on Twitter, if people start yelling at you, then you know that you're on the right side of the market, okay? When people start becoming emotionally invigorated against your opinion, that's almost always marks a market bottom or a market top. Okay, so we're not there yet, but hey, man, it's getting there pretty quickly, in my opinion. And overall, into this weakness, I'm going to be bullish. All right, hope that makes sense. All right, so next, simply what I want to do is pragmatically, we have to also look at the overall large tech stocks. Why do we look at the large tech stocks when we try to do an analysis on the overall market? Is because these large tech stocks move the whole market. They are the main movers of the market, okay? Trillion-dollar companies move equity markets. Now, pragmatically speaking, we're going to just go down the list of all these large tech stocks and just look at all of them as a whole, right? Very, very quickly. Do they look bullish or bearish? All right? Nice and simple, okay? Apple. Apple is trying to hold 250 as support. We have major support down here on Apple around 243, 245. It's showing extreme overextension now in terms of the Bollinger Band, right? So things could lead to a bounce, but this is still showing, pragmatically speaking, this is still weak. And if Apple breaks below 248, we will almost certainly see 243 to 245, okay? So Apple does not look bullish. It looks like it could still fall a bit lower, all right? Pragmatically speaking. Next, let's go ahead and take a look at Tesla. All right. Tesla. Very, very fond of Tesla here. Tesla is creating a falling wedge pattern into a major level of support. So support is 380, right? Falling wedge patterns are extremely bullish patterns that lead to bounces, right? Now, Tesla is creating that pattern, and it's at 380, which is a very, very important level of support. And as we are at this level of support, we can definitely bounce. Okay. So Tesla looks a bit more bullish than Apple, in my opinion. Okay. So keep that in mind. The setup is there, the pattern is there. Definitely looks a bit more bullish. All right. Netflix. Netflix is another major player, right? Netflix. Why are we looking at Netflix? Because it has a very, very important relationship as well. It's not a $1 trillion company, but it's definitely very, very important. Okay. We're holding above 95. We held above 90. We held above 92, right? Clear as day. This is very, very important, right? What is Netflix doing? It's trying to hold above $95. This is showing a bit of strength. Pragmatically speaking, this is showing a bit of strength on Netflix. Okay. Meta. Okay. What is Meta doing? We had a very, very extreme overextension, big drop to the downside on Meta. As we know, overextensions to the downside or the upside cannot maintain themselves. Meta is basically almost perfectly at 613 level of support. Okay? We're almost perfectly at 613. As we are here at the 613 level, very far overextended to the downside, by all means, Meta is definitely looking like it could drop a bit further down to 600, right? So there is a bit more room to drop on Meta to 600. By all means, you would have to be a liar. You would have to be like delusional to think that this is, we're going to bounce now. There's no reason for us to, it hasn't given us a complete reason to bounce yet, okay? So there's clearly still a bit more room to drop on Meta, right? But when there's this much overextension to the downside, my argument is when there's this much weakness, why would you want to try to chase a bit more weakness? When there usually is this much weakness, we end up getting strong bounces, okay? So that's my thought process, okay? So that's on Meta. In the short term, definitely looks a bit weak, okay? Microsoft. In the short term, definitely looks a bit weak. We broke below 405. We're down below 400. Now we need to see if Microsoft can hold 380, okay? So there's a bit more room to the downside on Microsoft as well, all right? Pragmatically speaking, okay? Let's go ahead and take a look at Amazon now. Amazon, also in the short term, definitely showing a bit of weakness, a bit of potential to drop a bit further lower. We are holding below 210. We're trying to hold above 205 on Amazon, but definitely a bit weak, okay? So as a whole, right? We're going to take a look at all of the large chip stocks as well. But as a whole, Apple, Tesla, Google. Oh, we didn't look at Google actually. So Google is actually still trying to hold above 300. It's trying to do its best, holding 300, holding support here, right? But as a whole, right? Clearly as a whole, Tesla, Google, Meta, Microsoft, Apple, Amazon, Netflix. Netflix is the only one that's doing pretty well. But as a whole, it's not completely bullish, right? So what we're looking at is it's not completely bullish on all of these large tech stocks. Pragmatically speaking. So what does that say? It says that there is a bit more room to drop lower. Pragmatically speaking, okay? Whether we like it or not. What are we looking at on the VIX? The VIX showed a bit more room to the upside, whether we like it or not, right? Crude oil, what do we see on crude oil? A bit more room to the upside. A bullish crude oil and a bullish VIX means a bearish stock market. So if those things continue to do a bit better, the market can continue to drop a bit lower. Okay, so I hope that made sense. Very, very simply, let's go ahead and just take a look at the S&P 500 futures. And once again, where are the S&P 500 futures? Very far overextended to the downside in terms of the Bollinger Band, okay? This is clearly showing that the overall market has a bit more room to drop lower because automatically, when something is trading like this outside of the lower bands, it's not an automatic reason that we're going to bounce off this, okay? There's still a bit more room to drop lower. So as we drop a bit lower, my point is that into this weakness, I am not going to be bearish. I would rather be bullish into this weakness, and I would look to go long into this weakness. What we looked at on the McClellan oscillator, what we looked at on crude oil maintaining highs like that in terms of what it would do to global economies. Crude oil cannot maintain itself that high. The VIX cannot maintain itself that high. The S&P 500 cannot maintain itself this low in terms of the McClellan oscillator that we also looked at day in, day out for the weekly time frame, for the daily time frame. A lot of things are pointed to a potential bounce in the overall market, okay? And the overall large tech stocks are approaching very major support as well. Whether they drop a bit further into those levels of support or if they hold soon is yet to be seen. But, you cannot argue with the numbers of what we were just looking at, all right? So now also on the NASDAQ, all right? So this is a daily time frame of the NQ futures. Did we break below any major levels of support? Did we break below any major levels of support, guys? No, we didn't break below any major levels of support, okay? We're still holding support. These large tech stocks are still doing decent, okay? Obviously, they're showing weakness in the short term, but we haven't completely made new lows. And even if we did make new lows, guys, I'm telling you, I'm not your financial advisor. This is not financial advice. I'm going to go long, okay? So, what's going on Netflix or on the NASDAQ? We are trading outside of the lower level of the Bollinger Bands, similar to the SPY, right? So we could continue to drop a bit lower on the QQQ, on the NASDAQ, right? On the Russell, the IWM is taking huge hits. This is very, very weak as well, and it can easily drop a bit lower. This is pragmatically speaking, still weak, okay? Now, with that being said, right, we looked at all these large tech stocks. We looked at all these large, these other indicators, right? Very, very simply, very, very quickly, very, very simply, what I want to do is look at the dollar, okay? So the dollar also has an inverse relationship to the market. And damn, we're looking at everything. We're looking at everything together. We're looking at the crude oil, the VIX, the overall stock market, the dollar. We're looking at everything together combined. And why are we doing that? Is because we have to. Because the more variables we look at, the better we can get a stronger bias and make a more informed decision. Okay? So, the dollar has an inverse relationship to the market. If the dollar rises, the overall market should be falling. Okay? So, time and time again, when the dollar is approaching this 99.50 level, there is a major pullback or a bounce, right? So, this level has acted as a major level. Okay? Major level. What just ended up occurring recently on the dollar here? What just happened on the dollar? We had a monster spike to the upside above 99.50, and now we're trading above 150. We had a monster spike. Okay, this is clearly showing a lot of strength. This strength in the dollar, now we need to see if it can maintain itself to the upside. How do we do that? The Bollinger Bands is one thing that we could look at together. If the dollar is showing extreme strength to the upside in terms of the Bollinger Band, if Monday ends up being extremely bearish as well, the dollar will be very far overextended to the upside. The dollar this extended to the upside cannot maintain itself. Okay? So if the dollar ends up pulling back, what the opposite occurs. So if the dollar pulls back, the market will end up bouncing. Okay? So that is currently what we're looking at on the dollar, right? Very simple. I hope this made sense, right? Last but not least, I want to take a look at gold and the crypto markets. Gold, silver, and the crypto markets. All right? Nice and simple. What's going on with gold? Regardless of the weakness that we saw in the market, gold is still holding above 5K. And of course, gold and silver move in unison to the overall stock market. Okay? So if the stock market is dropping, chances are gold and silver are also going to be dropping. So gold, we're trying to hold above 5,000. We have major support on gold right around 4,800. But one saving grace that we see on gold right now is that the lower level of the Bollinger Band is pointed upwards, which means that the potential downside risk to gold is stunted. Does that make sense? It's stunted. So let me really explain this, okay? If the lower level of the Bollinger Bands are pointed upwards like this, it means that in the next couple of days, if gold continues to drop, we will be trading outside of the lower bands on gold. And what am I telling you guys here? Is that when something is trading outside of the lower bands, it does not maintain itself. It wants to return back into the mean and bounce back into the Bollinger Bands. Does that make sense? So it is actually a good sign that gold's Bollinger Bands are pointed upwards like this. Okay? Hope that made sense. Let's go ahead and now take a look at silver. All right, very simple. Silver is also holding above $80. We did not yet break below 78 on silver. We're holding $80. Still showing strength, right? The market is showing weakness. Silver and gold are also showing weakness. Makes sense. Nothing too out of the ordinary here, right? Pragmatically speaking, that is what's going on, right? And last but not least, we can take a look at the international markets after this as well, okay? So crypto is actually one of the most important things that we have to look at here right now. What is crypto doing? When crude oil is bouncing, when the overall market is falling, what is crypto doing? Crypto is making new lows. We held 63K and we're trading above 71,000. Crypto bottomed out. Bitcoin bottomed out. It is showing strength above 70K while the market is showing extreme weakness. Now, why is that important? It's because banks and hedge funds, they look to crypto and gold and silver as more safe haven assets. But if the overall market was extremely weak, these would be selling off. If the overall market was genuinely very bearish, if the overall market was, on the brink of disaster, Bitcoin, gold, all of these would be dropping very dramatically. The fact that Bitcoin held a bottom here and is bouncing very well is really, really bullish, in my opinion, for the overall strength of the market. And we're going to look back at this together. What I'm saying, guys, if I'm incorrect, we're going to look back at all these things together. All right. The fact that Bitcoin is doing this well is a very bullish sign for the market. And once again, in the short term, the market can drop this week. We can show more weakness in the short term, by all means. But these are not bearish opportunities. In my opinion, these are opportunities to start going long, okay? Bitcoin bottomed out. Ethereum holding above 2K, holding above 2100 now. Solana bottomed out, trying to hold above, it's trying to break back above 90. These are really, really important factors to take into consideration. Very, very important. And we just looked over all of crypto. Now we can simply go ahead and take a look at these international markets. All right. So first and foremost, I want to take a look at the Japanese market. Okay. So this is the Nikkei. The Japanese markets are showing weakness. They're trying to bottom out here. The lower level of the Bollinger Bands on the Nikkei are pointed lower, which shows there is more room to drop lower in the short term. By all means, right? Nothing crazy, okay? The Nifty, the Indian stock market, is taking a huge, huge hit. And the reason for that is because, and the reason why we're looking at these international markets is because they are heavily, heavily dependent on Middle Eastern oil. Heavily dependent on Middle Eastern oil. So the Nikkei dropping, dependency on the Middle Eastern oil. India dropping, 60% of the Indians' economy is reliant on on Middle Eastern oil. So since this has started, we've dropped in the Indian market about 10%. What's going on the Indian market right now? We are trading very far overextended to the downside in terms of the Bollinger Band. In the short term, there could still be a bit more room to drop, by all means, right? So be very, very careful about being bullish on the Indian market. But with this extreme overextension to the downside, there is potential for a bit of a bounce. Okay, but currently, this is in free fall. All right, pragmatically speaking, this is clearly in free fall. The German market, the DAX, okay? The German market, very similar to the Nikkei, showing a bit of weakness as well, but it's starting to bottom out. And what's going on in the overall, right? The lower level of the Bollinger Bands are still pointed lower, showing a bit more weakness in the short term. Okay, so I hope you guys enjoyed. Once again, to really wrap it up, my overall analysis is I think the market should end up bouncing in the next. We're going to end up finding a bottom within the next week or two. All right, regardless of whether we find a bottom, how much lower we drop, in my opinion, the overall market should end up being bullish over the long haul in the next couple of months. Okay, so with that, we forgot the AI stocks. Okay, so now the AI stocks is just a whole different ballgame. All right, real quick, let's just go over AI. So NVIDIA. Okay, so now here's the thing. All right, here is the thing with NVIDIA and AMD. So these Middle Eastern countries, they made deals with NVIDIA, with AMD, because they have a lot of land and they have a lot of space. They also have a lot of space to put plants because water is essentially needed, right? So they can use their fake water to help power NVIDIA and AMD. With what's going on in the Middle East, it really heavily affects what's going on in the AI infrastructure space. So chips, AI infrastructure, these are going to be taking a huge hit. And that's why NVIDIA is not doing as well in the recent term, right? So NVIDIA really, really wants to find some sort of a positive outcome in the Middle East. AMD also wants to find a positive outcome in the Middle East. As you can see, there needs to be a bit of a bounce on these stocks as well, but they're trying to show a bottom. They're not making new lows, right? If you look at the SMH, same concept with the semiconductor ETF. They are trying to create a bit of a bottom, not making new lows, but this is just an added added layer to the tumultuousness in the Middle Eastern situation and the economy in general. All right. So there's a lot of powers at play. There's a lot of politicians that want to remain in power. There's a lot of companies that want to remain in profit. And there's so much at stake here for the global macroeconomic deals that are going on, the United States hegemony and the strength that the United States has over the Middle East, over the Far East, over Europe. These countries are going to look at the Middle East and the US, and they're going to start having to make a decision. Do they want to remain reliant and essentially loyal to the United States, or do they want to start shifting alliance and loyalty towards Russia and China based off of what Iran is doing right now? So there's a lot at store. There's a lot at stake right now in terms of everything internationally. So I hope you guys enjoyed the video. Please make sure to like. Please make sure to follow. You guys could go ahead and follow me. I am live every single morning during the New York session at 9:30 a.m. Eastern Time. I share my trades live. And after I finish live streaming, I share all of my trades, my swing trades, my day trades. We have our community there in my Discord server. So we have a really, really nice, vibrant community in the Discord. We're all talking. We're all trying to make better trades, make better trading decisions. So if you guys want to be a part of a community with me there as well, if you guys have any questions, you could message me anytime. If you guys want to be a part of the community of people that are trying to become better traders, so you guys see, everything that I'm talking about, I will talk about it in more detail in my Discord server, and we will talk about how to profit off of these things in the Discord server. So if you guys want access to it, click the link in my bio, click the link down below. All right. And love you guys. Thanks for tuning in. I will see you guys tomorrow in the morning, and then I'll see you guys tomorrow after hours as well. All right. Love you guys. Have an amazing rest of your day. All right. Take care. Thank you guys.